Today we are delving into the Basel principles established by the Basel Committee on Banking Supervision, or BCBS. These principles are forming the backbones of what's known as the Basel Core or the Basel principles, which are guiding the regulations and supervisions of banks worldwide. So, to find out more, let's jump right into today's video. Before we dive into the Basel principles, let's understand the BCBS. Established in the aftermath of financial troubles that took place in the 70s, the committees formed part of the Bank of International Settlements, with the mission to enhance financial stability by improving the quality of banking supervision globally. The BCBS influence cannot be overstated. Its members come from major financial centers around the world, and its guidelines are adopted by banks internationally, making the Basel core principles a globally recognized standard. Now let's take a journey through the evolution of the Basel principles, starting with Basel I, which focused on capital adequacy, the Basel II with its refined focus on banks' internal risk assessment, and leading to Basel III, which emerged in response to the 2008 financial crisis, emphasizing on the liquidity and leverage aspects. Firstly, Basel I, introduced in 1988, focused primarily on credit risk and set the stage with its capital requirement. It required banks to hold a minimum amount of capital equivalent to 8% of their risk-weighted assets. This was revolutionary as it introduced a standardized approach to credit risk, ensuring that banks maintain a cushion to absorb any possible losses. Then came Basel II, which expanded upon this foundation with a three-pillars approach. The first pillar dealt with minimum capital requirements, similar to Basel I, but introduced more sophisticated methods for calculating the risk-weighted assets. The second pillar, supervisory review, emphasized the need for regulators to evaluate a bank's internal processes and strategies for addressing risks. And the third pillar, market discipline, introduced transparency requirements obliging banks to disclose information about the risk exposure, capital adequacy, and risk assessment processes. This transparency aimed to enhance market discipline by enabling market participants to better assess banks' risk profiles. Basel III, developed in response to the 2008 financial crisis, built on this principle, adding robust measures for handling systemic risk and bank liquidity. It introduced higher capital requirements with a greater emphasis on higher quality capital and introduced new capital buffers like the capital conservation buffer and the counter-cyclical buffer. These buffers are designed to be built up in good times and draw down in periods of stress. Basel III also introduced the liquidity coverage ratio and the net stable funding ratio, two key metrics to ensure that banks maintain adequate short-term and long-term liquidity. Together, these frameworks under the Basel Core have reshaped the banking industry. They have made banks more resilient, transparent, and better equipped to handle financial shocks. So, understanding these Basel frameworks is crucial for anyone that is interested in banking or more broadly in finance. They're not just regulatory standards, they represent a global effort to ensure a safer financial world, one where the risk of financial crises are significantly mitigated. So these principles don't just exist in theory, they are actively shaping how banks operate today. From the way that they manage their capital to how they assess and mitigate risks, the Basel core principles are in fact still at the very heart of modern banking. The Basel core principles are here to ensure that banks can manage sudden economic challenges, protect depositors, and maintain trust in the banking system. So in essence, they are a safeguard against those kind of financial turmoil that can have devastating global impacts. And that brings us to the end of our deep dive into the Basel core principles. If you found this exploration insightful, don't forget to subscribe to my channel and to support my FinCram agent project. My Patreon link is also in the video description, or you can even send just a super thanks directly on this YouTube video. So that's all for today. Thank you for watching, and until next time, see you soon.